Hey, Paul, can you hear me?
I can.
Paul, you there?
Yes, I'm here. Can you hear me? Hello.
Yes, yes. Can you hear me?
I sure can.
Okay. Thank you for the time, Paul. Sorry about that. On the line, I have my partner Valentino with me, one
Hello,
of our
Paul.
financial analysts.
Hi, Valentino.
Great. So I know it's been quite some time since we last engaged, but my team and I were actually doing a little bit more analysis than usual. Given kind of like, what you've been through and my team are aware of the litigation and stuff like that. Just had to, make sure that's not a risk to the acquisition. But most importantly, what we were doing is actually shopping the deal around to banks. So one of the things that we do to make sure without a doubt we can finance the deal, we actually shop it around to banks and see what banks are willing to offer. And banks are extremely risk adverse. So if they're willing to finance the deal at our parameters, we know for a fact it's going to be very, very little risk for us and our investors. So I just wanted to get that out of the way. Uh, this is going to be either a extremely short call or it's going to be a really productive, informative call, and we're going to move forward to the offer. What I want to do is I'm actually not in front of my desk, but my partner is Valentino. Do you have some of the analysis pulled up?
Yes, I do.
Okay, great, great. What I want to do is let's just go over a little bit of the findings that we have. And again, this is going to be either short or informative. Let's go over some of the findings that we have. That we have, and let's just start letting Paul know exactly where we are.
Absolutely. Are you able to hear me clearly?
Yes, I
Yes.
can.
Great. So, Paul, I was taking a look at the financials from the years 2020, 21, 22, and the first 3 months of 2023. Now, one thing I did notice is that on a surface level, it seems the business has increased drastically, and that is great. One thing the banks are skeptic about is can we continue these trends for the next 5 years, right?
hmm
So 2020 we went from 582 to 21 to 1.6 million, and then 2022 to 2.3 million. Now before I dig deep in that, I want to circle back to the balance sheet as I have some questions regarding that. Now for 2020 balance sheet, it says we have current assets of about $678,000, with the majority being accounts receivable. Now I see accounts receivable also grew to, we have 1.36 million of factored accounts receivable in 2021, and there's no items for non-factor account receivable. And then 2022, we have factored accounts receivable dropped to 382,000, and non-factored accounts receivable went up to 888,000. So I'm assuming
hmm
you were able to collect the majority on those factored accounts receivable, but this non-factor accounts receivable, could you please explain a little more about what it is?
It is, yes. It is invoices that I do not have need to factor for capital, and I had my own funds to finance them.
Okay, so it's going to be an internal funding for those receivables, correct?
Yes.
All right, so is that a loss on your end?
No, it's not a loss. It's receivables.
Okay,
It's I just did not factor. So a factoring company is they advance us cash
okay.
for any invoices that we factor. So basically, they're buying our invoices from us, obviously with the contractual interest rate that we have with the company. So anytime I need financing, I factor the invoices that I need. If I do not need financing, then I do not factor them and I use my own capital. So I think it's the opposite of what you're asking. It shows that we have financial stability with our own cash.
Understood. Okay, that makes sense. Now, I noticed your accountant or whoever did a forecast for 2023. And it seems like they pulled some financial data from 2022 beginning April all the way to March 2023. We redid that forecast, and it seems like it's vastly different. Estimated net profit is $1.82 million. On our end, we estimated $1.35 million. Let me explain how I came to this. So what I did is I calculated the moving average, which is basically what is the average of the past 3 years on a monthly basis, and applied that to forecast the rest of the year. That gives a more in-depth picture and a more accurate analysis, taking into account trend factors. With that
Okay. Yeah,
said,
we're not into forecasts. I
Mhm.
mean, maybe that's something you guys use for, financing and things of that nature, but forecast really doesn't apply for my industry and my business, or any internal processing or anything of that nature. So as far as forecast, I mean, whatever forecast you guys want to use, you can use however you choose. I mean, because we use factual and real-time numbers.
right, absolutely. And we took into account what we do have. I don't know if you do have an updated forecast, and the reason I bring this up is because it's going to affect our ability to fund. If we're going off 2022, assuming we have 2.3 million, and then we look at 2023 and it drops, that's going to bring us to a negative. So again, this is another factor that banks take into account in regards to financing. Now, Nancy did tell me that initially you had a lower asking price, and then that went up, of course, obviously with the business doing better. Do you see these trends continuing for the next 5 years in regards to how the business has currently grown to a stage?
Well, COVID really did affect the business and the industry. So it really, I think, accelerated our growth quicker than what we have been previously, as far as how quickly we've grown. So now that COVID has pretty much dissipated, our sales are getting back down to, I think, about 2020 levels.
Right, 2020, 21 levels.
Okay.
About 2020 levels. So 2021, I think, towards about mid-year is when COVID, we started seeing an increase with COVID, all throughout 22, until about, I think, maybe October of 22 is when things started to normalize again. So right now, I think our numbers are about 2020 levels, and I think they will continue to increase from those levels versus 22.
Okay.
Yeah, and
Beginning of 22.
and that's kind of like what we're getting at too. You and I spoke with Dr. Loomis, and he kind of alluded to that a little bit on our last call. And we, in fact, think the performance of the company is, like you said, 2020, 2021. That's what we feel is more the true performance of the company, right?
Correct.
Not the entire 2022, which, I mean, from speaking with a number of family offices, some other investors that we know that are extremely interested in medical staffing, they are seeing the same thing that we're seeing all throughout the United States. So it's just an industry-wide thing. And, again, COVID did accelerate the growth a lot more than it would usually have grown.
Yeah,
Right.
exactly.
So
Yeah.
And that's where we're meeting here. So the banks, when they did their analysis, what was it that they were saying, Valentino? Well, long story short, Paul, we're not at that 10 million. Now, granted, we don't have sufficient data from you to do a true valuation or a quality of earnings like the other firms you are dealing with had the opportunity to do. But, given what we have so far, we're not quite getting to that 10 million. And like Valentino stated, financing based on 10.5 and 2.3 million, taking into account the correction that's happening in the industry, it's going to leave us in an unfavorable position, right? So that's what I really want to put out there.
I understand.
Right. And I'm not sure exactly. You shared with me a little bit why the other guys backed out and kind of, they were kind of iffy on the performance of 23, I believe is what you stated.
Yeah, I
Just
have
right now.
the last buyer. Yeah, they were a
Yeah,
little iffy on the performance for 23 since the
yeah,
beginning of the year. The numbers were little bit less than what they were for 22, and I tried to explain to them the same situation I'm explaining to you guys. But
right.
you know,
And that's going to be the overarching thing here. It's not that you have a bad management company. It's cash flowing. It's great. But for the 10.5 valuation, that's something that we see probably 3 to 5 years from now. And that's not a 2023 kind of situation. And again, COVID was such an anomaly. The banks were asking us for 17, 18, 19 numbers to really get a true reflection on the operation of the business as far as revenue wise and performance wise. So that's what the banks really have been doing.
Actually, let me
And
interject real quick.
yeah, sure, go ahead.
Circling back and building upon the bank statement, one thing that's another major factor really for financing is going to be what's on the balance sheet. In this business, there's a lack of hard assets. Banks love hard assets,
Sure.
right? Even if we assume we got 1.6 million in total assets, as it states in 2022, it comes nowhere near the 10 million you're asking for, right? And again, banks
Mhm.
prefer a steadily growth over years. We can't predict COVID. We really can't. So we're not putting any fault or blame on you. We're just trying to adjust the numbers and take into account how 2023 is going to perform moving forward. Because one big thing for us really is continuity of business. We don't want to buy the business and then year 1, year 2, year 3 after that purchase, we're already in a decline. It's going to put us in an unfavorable position. What we want to be in a position is we're able to give you what you're looking for, but also retain some cash flows to continue the growth of the business and maintain operations, right? Because at the end of the day, that's what we want. You've grown into what it is today, and we want to continue with that and expand upon it. So I don't know how firm you are on that 10 million, but if we could reconsider the new number and the new trends of the business, what would you be open to?
Yeah, I'm open to it because, like I said, the that valuation was based off of 22 numbers, and obviously that was mostly COVID, so we do have to take into consideration the new numbers, which are more of a reflection of the normalcy of the industry,
Right.
especially from 2020. Um, and I think in 2020, and with our current numbers, we're on pace. Let me see where we're at right now for the total year, and I can tell you what we're on pace for. And this is just with our basic business that we currently have.
Right.
And I think I've in my executive summary, as well as in our conversation, I explained a new service line that we're diving into with some international recruitment.
I told you
And
about that,
we're,
Valentino. I told you about that.
Right.
and we're in the process of finalizing that contract, hopefully within the next couple of weeks. Now we are entering into a partnership with another sub vendor that has all the networks for the international recruitment. They just don't have the domestic operations to place nurses at hospitals, and that's where we come in. So we qualify with the vendor, and it's a vendor manager that handles the client hospitals for their contractual needs for the international nurses. So we qualify to partner and contract with them. This partner of ours does not. We're bringing our synergies together to be able to meet the needs of this these client healthcare systems, hospitals that need international nurses. Because I don't have the overseas infrastructure for recruiting healthcare professionals.
Right.
The partner that I'm integrating with, or partnering with, they have the network established. So I expect that's going to drastically accelerate the growth of the business. I just can't speculate on the numbers. I know that from speaking with the partner, she's got about 800 applicants going through to qualify them to determine the next steps and trying to get them submitted. As far as the needs, from my conversation, there's about 5,000 job openings for international nurses.
Okay.
So having both of those quotes seems that we could really accelerate the growth of the business just with even a tenth of the placements of the 800 nurses.
This is sorry about that, Paul, but this is something that's going to factor greatly with these contracts. So when we're looking at contracts, in fact, we love businesses with contracts, but the thing is, how long, what is the length of that contract? Is it 1 year, 2 years, 3 years? Now, some contracts with certain companies are on an annual basis. So the more guarantee we can get from that individual that, hey, look, we're going to continue that service. We're going to give you that contract next year. Or if you have a contract locked in for multiple years, that is something that we could actually use those numbers and project out for a couple of years, as opposed to having a contract for 1 year and you're uncertain that's going to come through the next year.
Let me add to that very quickly. Paul, I want to say this is great for the business because not only is it going to bring more cash flow, but stability. Adding on to what Ansi said, yeah, what is the length of the contract? Again, you said you're going to begin in a few weeks. Are you going to be seeing immediate revenue? If not, what is the time till you start seeing that new cash flow come in? Because that's also going to factor in.
Sure. So just like with our domestic client hospital contracts, they're indefinite. The terms are annually. Sometimes they're 3-year terms, and then they just renew indefinitely. The client hospitals have the right to cancel, within a 30 or 60-day notice. But the contracts are continual indefinite contracts. With this international would be the same. Now, the difference between the type of job placements versus what we're currently doing with the travel nurses versus international is with the international nurses, the contracts for the nurses are going to be about 2 years long versus with domestic, what we have been doing what I've been doing anyway, the last 23 years are 13-week assignments.
Okay.
So it's not only increases the duration and the volume of the business, but it gives us the continuity of having employee retained for at least a minimum of 2 years versus 13 weeks, which is pretty huge, especially if we have a large volume. So that I think really is the nail in the coffin as far as the growth and the lucrative profitability of that service line, are the longevities of the contracts versus the domestic travel nursing of 13-week assignments.
Great. And
so the next couple weeks, I should be finalizing the contract with the client vendor management system. And now, as far as immediate revenue, it is international nurses, so some of them have the NCLEX, some of them don't. So it just depends where the nurses are in the immigration status. But we have an attorney that we're working with that has told us that we can. There's a new law in place for registered nurses and physicians and other healthcare professionals where we can expedite the immigration process and decrease it from the previous 9 months to a 2-year process to about 3 to 6 months. So once we do get that contract, depending on where the nurse is in the application process, and right now the profiles that I have seen do not currently have any status with immigration. So we're looking at 3 to 6 months out.
Okay, so Paul, one of the things that we discussed is how you are serving a large portion of Ohio. Is that correct?
Yes, majority of our business, I'd say about 55 to 60% is in the state of Ohio.
Okay, great. Now, taking into account the new contract that's coming in, the international nurses, is that going to be able to break up that concentration? Is it going to be able to decrease that number? Because we really want to decrease that concentration. Maybe we'd be more comfortable with about maybe 40%, 30%. That'd make a little bit more sense. And we're looking at actually but actually service some of the hospitals that we have right here in Florida. Now, go ahead, address that, and I have another question.
Sure, yes. So yes, that will definitely break up the concentration in Ohio, because this new contract will be spread out through the nation, as well as we have throughout the year have added several new client hospitals, and we've expanded our client hospital base in the state of California. So we're starting to see a little more uptick in the state of California with placements and nurses. For example, we have a nurse starting on May 22nd that we just placed in California. We're starting to see Ohio wane off a little bit because of the rates. During COVID, Ohio rates were equal to almost every other state. During the normal industry and during normal times, California, a few other states, mainly out west, rates are always higher than Midwest and East Coast. So now we're starting to see that trend again, where the nurses from the Midwest, East Coast are wanting to get paid more, begging for their buck, and are moving back out west.
Okay, that makes more sense. That makes more sense.
But with the international placements, I think that's going to be spread throughout, because the rates are going to be pretty much the same throughout the nation. And a lot of the international nurses are willing to go wherever they can get an assignment at.
Okay, that makes sense. So now let me ask you this. Obviously, the rates are much lower here, like we are in Florida, as opposed to California. Correct. But I'm not looking to have a massive concentration here in Florida. Now, our investment thesis, as you might be aware, is to acquire for-profit hospitals, which we are focused on Palm Beach County being that location for us to focus our strategic efforts. I obviously want to staff our own hospital, and our third party, well, not third party, but our other branches that we have attached to the hospital, such as the physician practices,
right,
and other companies will have in the portfolio. Now, how feasible is it to keep about 2 to 5% staffing here in Florida? Would it make more sense, or would we have to venture out, or would that something that's unsustainable because they're going to want to go out west and get a higher pay rate?
Well, it will depend on what type of job opportunity that we're offering them, because mostly, you have to boil it down to what the interests are of the nurses. And a lot of times the key factors are 1, compensation, 2, location, and 3, benefits. And then a lot of times just scheduling, shift, and stuff like that falls into place, right? So those are the main key factors. So depending on what the job openings are for, Palm Beach hospitals, and what we can offer them as far as the compensation will determine, and the length of assignment. So when you hire nurses for Palm Beach or your new clients, are they wanting them for 13 weeks at a time, or are they wanting them permanently? Can we do a year contract versus 13 weeks, 6 months? Things of that nature. Sometimes we have nurses that want short-term contracts. We don't have a lot of short-term 4-6 week contracts right now. So it just depends on what the job type is, compensation, benefits, and then the duration, how long it is, and the shift and stuff like that. But I tell you, if you can offer the highest compensation, you're going to get a lot more attraction. I'm sorry.
Is that a part of the reason why you don't have a kind of a focused effort here in Florida, even though you're based out of Florida? Okay, that's what I thought. That's exactly what I thought. And that's what I wanted to get to.
Yeah, and that's usually the number one factor. Is a lot of times it's compensation. So that's why a lot of nurses, if they're going to be doing the same job and they can go anywhere in the country, why wouldn't they go somewhere where they can make the most money, right? So that's what is tough about the travel industry. But a lot of times too, nurses want to travel around. They want to do 1 13-week assignment in one state and go to another state and things of that nature. But what we see as far as trends for keeping nurses and retaining them long term are the nurses that really don't want to travel much and only want to travel like 60 miles to another city. So we call that interstate travel. So that's why we've been, a majority of our business in Ohio has been long term. And if you look at our employees who have been with us longest are in the state of Ohio, because they just don't like to leave. They have families and things of that nature, and they don't really want to travel. So they just do interstate travel from one city to the next. So I think, if you're looking for nurses to stay at your facilities long term, that most likely the attraction will be from the next city, or a city within 60 to 120 miles away, or even 180 miles away from from Palm Beach. So you're probably looking at a lot of nurses coming from Miami and Fort Lauderdale, or or up north coming down south, that will stay there long term, versus nurses that come from Ohio that only want to come down to Florida for 13 weeks and then go somewhere else.
Great tip, great tip. Now that makes absolute sense. So now let's bring the conversation back to the focus on the numbers here in this structure with respect to this deal. Now,
Mhm.
the LOI, as I told you, it has been ready for some time, but again, given the what my team had to deal with, we just wanted to make sure that we're not sending you something that's absolutely out of your ballpark, and you just completely walk away. What we have to do is now, again, we want to take a look at 2020, mostly 2021, and we're even comfortable with doing the entire 2021 year. And we
Mhm.
actually want to do our analysis based off those years. We've done some of that already, and we were somewhere around a number that we feel comfortable with. And I actually want to just double check on that. You know what they say, measure twice, cut once, right? I want to double check on that. But I just wanted to just catch up with you and see what your thought process was with respect to that valuation. Again, we just didn't want to present to you an offer that you felt was completely disrespectful,
And see,
and we ended up on bad terms.
very
Yes, go ahead,
quickly,
Valentino.
before that, Paul, as you're signing these contracts in the coming weeks, I don't know if we could receive information regarding that, because that could also play into the offer we make you. The expected cash flows, the amount of individuals you'll be able to recruit, so on and so forth, the time frames, and how do they contribute to revenues percentage wise.
Yeah,
But
I can definitely keep you guys informed of the process and the status and things of that nature once we do finalize it, and then what we're looking at as far as rates and things of that nature, and how soon that we're looking at getting placements. Because once we finalize the contract, I'll have a better idea of how quickly we'll be able to start generating some revenue,
Right.
as well as I'll be contracting with my partner and finalizing that, so that we can get a more streamlined process with the pipeline that she has in place with the 800 or so plus nurses that they have available. And then we also have another one of her law firms that does recruitment in the UK, also expressed interest in partnering with us for revenue cycle management for some of our clients here in the United States, which, I told them I'd have the discussion, but I don't know where that's going to go, because I'm not that familiar with revenue cycle, but I think it's more like medical billing and coding and stuff like that
Okay.
for hospitals. But anyway, but that's, a conversation we'll have down the road, but I can also keep you abreast of that. But
Okay,
yeah, until we
great.
finalize
So
that contract, so I'll have a better idea. But let's get back to the numbers. I just wanted to give you an update where we're at currently. So right now, for the first 4 months in 2023, we're at 1.7 million in revenue. And if you divide that by 4, take it times 12, we're right now on pace for 5.1 million.
Valentino, you're looking at the financials right
I'm
now.
looking at the first 3 months. Yeah, I understand what
So
you're
do me a
saying.
favor.
I would not take that approach, though. That would assume you would be making around the same every month for the next 12 months. And I've seen on a monthly basis, there are some months that are doing greater, some months that are doing less.
Yes, you're correct. You're correct. But it's hard to predict what next month's going to be and things of that nature. How many nurses that we're going to staff and recruit and things of that nature. It's really tough to try to pinpoint month by month. So the best numbers that we can go by is just by historical previous months and
Yeah, but
yeah.
we're not doing our valuation based on projection 2023. That's nothing. That's an analysis thing,
All
and
right.
for our own sake, we do projections to see, hey, this is what the end of the year could look like in our possession of the business and moving forward. But that doesn't add to the valuation whatsoever. That's why I wanted to stress we're going to have a focus on 2020 and 2021 numbers. I don't think we have 2019. I don't think so. But off those 2 years, we could actually kind of normalize the numbers to what they really should be, taking into account 2022 and just some other factors. We're able to do that. That's not a problem. And it'll give us a much closer number. Again, the end of 2023, we're not really focused on that. We're going to look at the historicals. And again, take into COVID-19 and how much it drove growth. And again, we're just going to normalize some of that, and we're going to come to a really, really close offer that the business should be if COVID-19 did not happen. And again, the thing is, we can't really even factor COVID-19 again because it was such a rare occurrence. You know what I mean? It's not like we can say, well, maybe kind of like the economy, there are certain cycles you can kind of predict. COVID-19 is nothing like that. So we can't even say, hey, maybe 7 years, 8 years, 9 years, something like that to happen. We can't even say that. So
Right, yeah, exactly.
it's just such a freak occurrence.
Yeah, and that sounds fair to me, and I'm open to that as well. And again, like I said too, I'm open to staying on board for duration of time with the business because I kind of like what you guys are doing, and I think you have a competitive advantage when you're purchasing some hospitals and can fully staff them. And if it's owned by the same entity, then there's several advantages to that we can go into in greater detail because I'm sure you're familiar with the largest healthcare system here in Florida, HCA. They have their own internal travel staffing agency that also partners with other healthcare systems and provides them with the vendor management and travel nurse staffing as well. So that's a very similar process that's already, that's what HCA does. And there's several advantages to that.
Yeah, but not only that, what I would like to do is use some of your network, some of the hospital owners that or high-ranking officials, members of the hospitals. I want to have some discussions with some of these folks and just kind of not pitch, but kind of have them have a bird's eye view on our investment thesis. I mean, we have a lot of top guys here. The owner of the Miami Children's Hospital is one of our partners, by the way. I'm not sure if I ever mentioned that. We have that kind of perspective, but I would love to tap into some of your network and see, how big we could actually grow this. And I would love for you to be part of it as well, Paul.
Okay, great. All right, so is there anything else you guys need from me?
No, that should be all. It seems like we're all on the same page in regards to the understanding of the numbers. Like Nancy stated, we're going to do an average of 2020, 21, try to normalize those. So it will give us a clearer picture, and then we'll probably be able to send you that offer, and we can move on from there.
Okay. Sounds fair, guys. I appreciate it.
Absolutely. Nancy, any closing remarks?
No, I have no other questions or anything.
Well, hope you have a great day, Paul. Thank you.
All right. Thank you, guys.
All right, guys. That was a live call. Give me just a moment. And we will be going further in depth with this. We got information about some contracts coming up. We also have the information about... Okay. Yeah, we got some more information. We're going to do a normalization of 2020 and 2021 coming up. So just watch out. I'm going to hop on a call with Nancy, and we'll be giving you guys more updates.